Thank you very much for joining us here on this Friday evening. You're watching Business at 9. Our top focus, Vedanta is likely to have emerged as the top bidder to buy Jaiprakash Associates. Ankur Mishra joins in with details.
Yes, Vedanta is likely to have emerged as the highest bidder for acquiring Jaiprakash Associates Limited. This is as per sources. We understand that on an NPV basis, Vedanta's bid is likely to have stood at 12,505 crore, which is more than Adani's bid, which was there in the challenger round. Remember, the round was conducted by lenders to increase the value, and finally, we may have the winner for acquiring Jaiprakash Associates very soon. Remember, this company has been there in the insolvency process for long, and now it will all depend on the court whether or not final approval is given, because the committee of creditors or lenders will have to move to court with the results of a challenger round, and it will only be declared in court who finally gets the company for acquiring Jaiprakash Associates Limited. But for now, we understand that Vedanta's bid likely to have outpaced Adani Group's bid in this round.
Moving on, Nifty ends over 1% higher in trade for the week as investors clearly have cheered the GST reforms. Meanwhile, let's tell you bigger gains coming in for the broader markets, which has been up more than 2.5% in trade. But if you're speaking about sectors, auto and metals, in fact, were the top gainers, while IT stocks were the only weekly losers. At least that's the Indian market chapter. But as far as the US is concerned, let's tell you how the US labor market showed signs of cooling in August, with non-farm payrolls rising just 22,000, far below expectations of 75,000. You're looking at the numbers on your screens as to how that has panned out, because private payrolls added 38,000 jobs, also missing estimates, while government payrolls fell 16,000. Manufacturing shed 12,000 jobs against a forecast of 5,000 losses. Now, the unemployment rate held steady at 4.3%. This is in line with expectations, but average weekly hours ticked down to 34.2. Revisions for the prior 2 months to cut a further 21,000 jobs. Now, the weaker than expected report triggered a rally in US treasuries. But like we just spoke about that, and essentially that has had an impact as far as Wall Street is also concerned. So let's also look at the numbers, because Wall Street is trading mixed today. The S&P 500 and Nasdaq opened in the green, both in fact touching fresh record highs. But the Dow Jones is hovering flat after slipping about 15 points. This comes, like I just said, after weaker than expected US jobs data, which is raising hopes that the Federal Reserve could cut rates later this month. And of course, currently trading levels at 45,389.81. But we leave it at that for the moment. Let's now shift our focus to more that we are clearly tracking on Business at 9. This is amid rising global tensions and US President Trump's wishes for Apple to manufacture iPhones in the US. The company is set to post robust sales in India in financial year 25-26. What more do we know about that? Well, my colleague Sumita is here to decode that. Let's listen into her.
That's right. Apple's sales are expected to have touched $9 billion last financial year after its retail push came about. In fact, iPhones accounted for a majority of the sales that the company clocked. In fact, Apple just recently added 2 new stores in the cities of Bengaluru and Pune, aside of the already existing store network that exists in Delhi and Mumbai. In fact, the company is also planning to now launch new outlets in Noida and Navi Mumbai early next year, according to what sources are suggesting. And it only adds to Apple's reseller network. Now, this announcement of the kind of sales that Apple has clocked in, it's coming in at a time when the company is dealing with stagnant mobile device sales around the world. And of course, there's geopolitical uncertainty that persists, especially around China, given the fact that China has been earlier engulfed in a trade war with the United States. It's also the company's largest base. India, even though it represents still a fraction of its overall business, has a 7% market share here in this country. But the company continues with its push here, and this market is expected to become a key market for Apple in the next couple of years. So whether it's related to the company's manufacturing plants or retail, that's essentially in a push to reduce dependence on China. In fact, Apple is expected to account for 25% of, India is expected to account for 25% of Apple's production. And in terms of production and devices, well, just ahead of its annual event on September 9th, Morgan Stanley has released a note on Apple, and it expects Apple to increase prices modestly for its iPhone 17. In fact, average selling prices could see a boost of 5% in FY26. In fact, this is the first ever hike that is likely to be taken by Apple since 2017. However, Morgan Stanley doesn't expect demand to be impacted. So all eyes on the September 9th event now, when Apple unveils iPhones, watches and AirPods too.
Right, moving on to more that we're tracking, the productivity impact of AI is overstated and may not be more than just 30%. At least that's what Zoho Corp's recently appointed CEO Shailesh Dave believes. In fact, he recently replaced Sridhar Vembu as Zoho Corp CEO, even claimed in a candid chat with ET Now that tech firms overhired during the COVID pandemic and in fact are blaming the recent spate layoffs on AI. So here's an exclusive slice of that chat that my colleague Jude Sanith had with him.
But with this AI coming in, so the more important thing would be to kind of look at the hype, look at what is valuable, look at what is effective, and then apply the technology prowess and then bring value to the customer, right?
Absolutely.
So that change is happening now. So without falling to the hype, understanding how we can provide value to the customer, that I think will become a very good differentiator going forward, apart from knowing the domain or the problem that the customer is facing, knowing that well would be the other one.
Complain about the lack of availability of talent. It is there everywhere. You just have to go where the talent is. It doesn't apply just for AI or software or SaaS. They are waiting to be tapped. They are not able to move to Chennai. They are not able to move to any tier 1 city. But if you are willing to go to where they are, build that ecosystem, build the structure and setup, you just don't have to complain. There are plenty of talent available. So that's what we have done, not just in India, even in regions like Latin America or Southeast Asia. Apply the same model. So go to smaller towns, tier 2, tier 3 cities, where people are happy working there with the same talent. So because today it is a flat playground for everybody, right? So especially with what you have with ChatGPT and all, right? So everybody.
All right, let's also move on to another ET Now exclusive. New India Assurance will pass on maximum benefits to its policy holders. At least that's the word that has come in from CMD Girija Subramaniam. Let's listen into that exclusive chat.
The premium might, change because of the IDV coming down, and the sales may go up because number of vehicles possibly that would be insured would go up because of this. So there could be a mixed bag, and possibly we would be where we are in terms of premium volume.
Okay. So, ma'am, when the IDV changes, your risk remains the same?
When the IDV changes, the risk, it depends on the brand of vehicle that is there and the various variants of that. The premium differs accordingly.
What do you want to say about that whole ITC issue on which the insurance industry is speaking that ITC would have helped the insurance sector, but now in health insurance there will be no ITC. So how insurance companies will cope up with that, because you being the market leader, whatever you will follow, others will also decide.
Yeah, actually, New India is a market leader in across all lines. In health, we have a big portfolio, but majority of it is GMC. So the impact of the current exemption is on the retail book, where we don't have such a dominant book with us. And I think the bigger impact of this will come on the standalone health insurance companies and the other companies that are more focused on health retail. So basically on the input tax part, I think this is going to be a temporary disruptor for the insurance companies. They'll have to figure out how to make up for that.
All right, time for a quick break here on Business at 9. Stay with us. We're going to be right back.